Hi there and welcome to Stock Club. I'm Mike and joining me in today's episode is MyWallSt's analyst Anne-Marie Kingsland. We've spoken on the podcast before about cloud-based unified communications. Basically, it's technology that integrates various communication and collaboration tools into a single system. These tools typically include voice, video conferencing, instant messaging, email, and file sharing, all the good stuff. So everything we use in business, basically. So according to a Cavell Group report, cloud-based unified communications penetration in Ireland is currently at 44%, and that is expected to double within 5 years. So as it happens, our friends in Vodafone Business and RingCentral, which is also a NYSE listed and leading provider of AI-driven cloud business communications, announced the launch of Vodafone Business UC with RingCentral for organizations of all sizes in Ireland. This is big for business, already available in Italy, Spain, Portugal, Germany, and the UK. This solution allows businesses to facilitate seamless communication and collaboration from virtually any device, anywhere, at any time. With this offering, Vodafone Business Ireland and RingCentral are helping businesses adapt to the evolving landscape of hybrid work. So let's dive into today's episode. Anne-Marie, how are you?
I'm good. How are you?
I'm good. It's good to have you back. I know you've been back on the podcast, but you haven't been back with me, so it feels like your reintroduction. It's nice.
Yeah, this is properly back. To be fair, I actually was thinking before we got on this call, something that you and I need to discuss separate from Emmett is that he has set decorated for his calls,
big
right?
Time.
Yeah, he's got the library and he's got those two chairs that are somewhat facing each other, but not quite. It's kind of like a hotel lobby in there. And you and I are just in these vacant spaces.
This is kind of airing out the only person who's doing it properly and professionally, and we're just like, this nerd is doing it. Yeah,
we're reporting live from a local side room that I found 15 minutes ago. Here's Stock Club. Yeah.
Well, he is still making fun of me because I had to record one episode in my bathroom. So
oh no!
That's the high levels we've got here.
Yeah, I do remember a year and a half ago at some point we did go through a phase with you where you were in a coat closet and the coats, we could see the coats along the walls on the hooks. I did appreciate that. I felt like that had a bit of Harry Potter realness to it or something, you know.
That was I was in that place for ages. That was COVID. I remember. Yeah, when I moved home to the parents' house over COVID and got stuck in the old coat room closet, and people made the Mike is in the closet joke for a solid 6 months, and it was one of those that never didn't get laughs. So
low hanging fruit.
Very much so. Yeah. Okay, so we brought you back on the pod to talk big picture. So you were going to start with Iran, and then you're going to figure out North Korea. Was that it?
Yeah, we're going to just unpack all the geopolitical stuff first. I think it's kind of the smartest way to go about it. You know, you want to start from top to bottom, big to small. So, yeah.
Okay, no, but seriously, where are we going first? I'm going to kick it off actually with the weight loss drugs.
Yeah, I mean they're all over the place since they hit the market. They've been all over the news. Did you see the stat that came out this week that says Novo Nordisk is like 5% of Denmark's GDP or something like that? Insane. Yeah,
it became the biggest European company there in the last month, I think, and it's apparently severely affecting the Danish krone, because it's converting so much dollars to Danish krone that the currency is all over the place. So Hims was the big story from this week. So Hims and Hers, you've heard of that before?
Oh yeah, I hate them by the way, but
I remember you had opinions very early on. So if you don't know, Hims and Hers basically got famous for making boner pills and selling Rogaine. Is that kind of where they really started?
Yeah, and I think they do some vitamin stuff, and then they went into, you can get anxiety and depression medication now from them as well. Yeah,
but I think originally the plan was kind of to sell the stuff you didn't want to go into the pharmacy for.
Yeah.
So it was kind of like this discreet telehealth service, and it's obviously expanded so much since, and we're kind of probably doing it a bit of a disservice, but we're known to be a bit facetious on this podcast. But before we get into, so Hims and Hers was making headlines on Monday. Mm-hmm. Stock was up as much as 38%, I think, at one point. Mm-hmm. But I just wanted to do a bit of background around weight loss drugs in general. So basically the entire market, because we talk about it so much, I thought it would be good to kind of have this, I suppose, foundation, we'll say. And it's just an interesting topic, and it could be seriously revolutionary in terms of pharma industry, obviously, but just in terms of the world. Like, as in, I know people expound on this so much, and they say people are running scared. And McDonald's CEO was talking about it, and Krispy Kreme stock is falling off a cliff because of this, and airlines are gonna save money on jet fuel because people are going to be skinnier and all this stuff. Like, as in, I heard who was it, Stryker do the hip replacements is their big thing, and apparently obesity is the number one cause of hip replacements, and they're really worried. And it's really interesting because there is so much speculation about how deep the effect of these drugs is going to impact the world in the next 10 years, 20 years, whatever. So I thought it would just be go back to do a bit of homework on it and explain a bit more. So basically the entire industry is based on this hormone called GLP-1. So GLP-1 helps control insulin in the body, hence how these drugs all originally started as diabetes treatments. But what it also does is provide that feeling of being full or satiated. So after eating, your body releases this GLP-1 hormone. You feel full, satisfied, you don't want to eat anymore. So interestingly, this discovery was made all the way back in the 90s by a scientist at Eli Lilly, but it basically didn't go anywhere. I think the upper echelon were just kind of like, I don't know if obesity is a disease, I think it's a syndrome, I don't think people will take medicine for it. So essentially they had this way back when, and their patent expired in 2017 and they did nothing with it. And then separately, roughly around the same time, a bit after, in Denmark with Novo Nordisk, they made basically a similar discovery. However, leadership were way more on board in this case. So they would go on to release the first GLP-1 drug called Saxenda in 2014, and then Ozempic, which is kind of eponymous now as the weight loss drug, even though I think we've moved on from Ozempic for a lot of cases. But Ozempic was the follow-on from this, and even Novo Nordisk were shocked by how effective it actually became for weight loss. So it was almost unintentional. They just tried to bring, I think Saxenda might have been a daily injection or something, and they just tried to extend it so it would only be a weekly injection. And when they did that, they were messing with the kind of hormones involved. They basically made this miracle weight loss drug. Eli Lilly, which is his main competitor, in the meantime, they were spending billions and billions on Alzheimer's drugs, and it kind of didn't really go anywhere. They were a bit of sunk costs, and like they didn't really get the results they were looking for. So they brought in a new CEO, Dave Ricks. He went all in on weight loss drugs. He made it a complete top priority, and then they hit the ground running. They really expedited the kind of entire drug development process. They came out with Mounjaro for diabetes in 2022, so to see that as a kind of Ozempic equivalent, and then Zepbound for just weight loss, which is the equivalent of Wegovy, Wegovy for Novo Nordisk, and that came out last year. So that's kind of the rundown.
All right. So fill us in then. Hims and Hers, they were all over the news. It seems like they are trying to hop in here with the weight loss drugs. What's their path looking like?
Yeah, so we talked about it up 38% on Monday. So it's already been in the market. It's actually been driving the stock for quite a while, these weight loss drugs. But it's important to know, like, Hims and Hers were, I think the stock is up about 90% in the past 6 months. This was before Monday, because they were prescribing off-label weight loss drugs since the end of 2023. Because the demand was so pronounced, basically. So it's the fastest growing segment of the business. So it was already on this trajectory. And then on Monday, they announced they would be selling what's called compounded versions of these weight loss drugs, these GLP-1 receptor drugs, which we've talked about, which is why it's so effective. And the big thing really about it is that they're selling it for 85% of the cost of Ozempic and Wegovy and Zepbound. So I think for a prescription for Wegovy, it costs about $1,350. And then for what Hims and Hers is offering, it's about $200. That's for a monthly subscription. So you can see why there's such a big deal made about it. Yeah. So yeah, that's why everyone is basically losing their minds. The Hims CEO came out there saying that this will allow customers to access these drugs without navigating the shortages and costs that are currently limiting access to the branded medication. So there's a very real reason why it's happening. And there's a very real reason why investors are so excited about it, because you're getting, imagine someone's coming out and saying they're selling Birkin bags for 200 quid and you can buy them tomorrow. Do you know what I mean?
Yeah,
it's that high end stuff, and it's already been in the news for there being shortages and a lot of people being priced out. So yeah, very much a big deal.
But how are they doing it? How are they lowering their prices? How are they allowed to do this? I mean, I'm assuming that Wegovy and Zepbound are patent protected. So Hims and Hers are hardly in the back room, like mixing up like a fresh off brand themselves.
Well, this is the thing. So they kind of are doing that, which is mad. Because when I saw the headlines, I was like, surely with pharma companies in general, they have these extended patents. It could be up to 20 years, and no one can go and make what's called a generic.
Yeah.
So pharma companies will always experience this for their long-standing treatments patent cliff. So if you prescribe, I don't know, X treatment for headaches and no one else can copy what you do until your patent runs out in 2024, and then everyone can produce what's called a generic. And a generic is basically just an off-brand. It does the same thing, and they're just copying what you've done. And it's cheaper, and everyone kind of uses that because it's a tenth of the price. This isn't a generic. It's actually a practice called compounding. So this allows for the manufacturing of copycat drugs when they are in a shortage. So don't feel bad for Novo Nordisk or Eli Lilly anytime soon. This is only happening because they literally can't produce these drugs fast enough because demand is so high. But it is a process that isn't really, it's definitely not as above board as generics is. So yeah, like if you're a Hims shareholder or anyone at Hims right now, whoop-de-doo, but like there are drawbacks as well. So the FDA doesn't track how many people are on compound treatments, and weirdly they're not, like, technically not FDA approved as well. So they don't have to go through the same safety and efficacy measures. I think what was interesting about this story is Weight Watchers, which is in the business of prescribing weight loss drugs, is not getting into the compounded versions of these drugs. So there are certain question marks. I don't think people will care as much, because basically you're given this miracle drug for 85% of the price. You know, that's enough for everyone. The Hims CEO, he said that they'll be produced in a FDA approved facility. They went through apparently hundreds of potential partners to find the right one who could obviously meet demand, because there is such a demand here, but also safety. But yeah, there are more question marks here than brand name treatments. But if you kind of zoom out and look at the why all this is happening, like I think according to the Food Research and Action Center, current estimates have 40% of the adult population in the US is clinically obese. So it's rare that the pharma world has seen a drug that could apply to 40% of the population. Do you know what I mean? It's and by all means, like, it's not just a weight loss drug. It affects heart disease. It affects people give up smoking on it. Apparently fertility measures are going up as well. People are having babies because they're on Ozempic. All of this stuff, it is seen as this absolute panacea for kind of a lot of the problems. Because if you think about if you think about diseases in general, so much is caused by being overweight or being obese. And we talked about, you know, the hip mobile, like the striker and the hip replacements. Like there's so much follow on, and I think that's why the demand and just the absolute off the wall kind of supply glut is happening now. So yeah, it is. It's very, very interesting.
Well, you might not know the answer to this, but does that mean if they are allowed to use these kind of off brands because there's a huge amount of demand and not enough supply, does that mean there's a fall off point? Like if Wegovy was to get to a point where they were producing enough to meet demand, does that mean like Hims and Hers wouldn't be able to produce this off brand anymore?
Yeah, technically it is a temporary situation, obviously, but with Hims, it does feel like
they'll find a way.
The ability to sell these compound drugs will be around for quite a while. Like technically it's temporary, but there's an argument that Eli Lilly and Novo Nordisk might never be able to fully meet demand. Do you know what I mean? If 40% of the population is applicable for a prescription, The other thing behind it is it's very politically friendly to have a cheap option like this available to the public. You remember a few weeks back, I was doing that awful Bernie Sanders impression, but he was going after these companies because the price of this, it was just basically pricing out regular Americans. Do you know what I mean? If you can't spend 1,300 quid a month on these prescriptions if you're a regular day-to-day person. So I think because of that, because of the fact that they might never be able to meet demand fully, if 40% of the population could apply for it, I think it'd be fair to say it'll be a growth driver for some time yet. And they've said as well that when demand is met, they can just go and start prescribing Eli Lilly and Novo Nordisk products as well. So yeah, it's definitely going to stick around for HIMSS.
Yeah, and I suppose actually what you said there, you're saying 40% it's applicable to because of obesity, but as you said, there seems to be an expanding use case here. So it could be, it in 2 years is seen as a solution for people who want to stop smoking or who have other addiction issues. I think that's quite interesting, the way it seems to just curb people's behavior in terms of when they are out, seeking some form of addiction. It just like allows the body to feel satisfied. So definitely something to keep an eye on. What are you kind of on the lookout for in the future with HIMSS and HERS and these drugs?
Well, with HIMSS and HERS, I think this will stick around for a while as a catalyst. We talked about that, and I think the political implications behind it are going to be very beneficial for it. It's also tough to take something away from people once it's been given. I always think that. So in terms of the industry in general, well, I say the industry, it's basically the big two. It's Eli Lilly and Novo Nordisk. I was reading up on it, and what I think is interesting is that Eli Lilly came second to the market, but it may actually end up being an advantage for them. So Zepbound now is Eli Lilly's new be-all end-all drug. It's their equivalent to Wegovy. It's just their weight loss drug, but it works slightly differently to Wegovy. So it relies on GLP-1, which you discussed, foundation for all of this, but it also uses that in combination with another hormone called GIP, and because of this, basically it accelerates weight loss even more so than Wegovy. So Wegovy tops out apparently at 15% of your body weight, while Zepbound can deliver 21%. And in fact, Eli Lilly has another treatment in production that uses a combo of another hormone as well, so 3 hormones within your stomach that can lead to weight loss of 1/3 of your body weight. So I think in terms of Eli Lilly, I think it's already at a $700 billion valuation. I think they're talking about it being the first $1 trillion pharma company. Their predictions that Zepbound alone could bring in $70 billion in sales by 2030. And if you have this best-in-class drug, the projections would also be that people would move away from Wegovy or Ozempic or even the Marjan from Eli Lilly itself and choose to be with the most effective treatment. So obviously none of this is played out yet, but if you're looking at the two, I think Novo Nordisk might be under pressure to bring out their own version. It could be a bit of an arms race coming forward, but then again, the demand here is so pronounced that I think they're all going to be in quids in for quite a while.
Yeah, all right. Good to hear.
Okay, so this is a really interesting 1-2 punch we've got, because we're opening the show with weight loss drugs, and then and then we're moving on to Red Lobster and the unlimited shrimp bankruptcy.
Yeah.
So I'm gonna ask this now, Anne-Marie. Are they related? Is the Red Lobster gone out of business because of Ozempic?
I just had that realization there, where I was like, oh my gosh, like maybe appetites were so curbed that the endless shrimp could not keep the restaurant afloat. Like, I didn't even consider that at all.
Yeah, but so if you haven't heard about this, explain to us. Basically, Red Lobster went into bankruptcy this week, and a lot of people are blaming their endless shrimp offer, which which sounds funny, and I want it to be true, but I'm not sure if it is. Could you explain?
Yeah, I mean, I think we all wanted it to be real. I think like it was good for the tweets, it was good for the memes, and to be fair to people, it was what the management team came out and said. So we were all like, oh, okay. Genuinely, so back in the third quarter of 2023, management said that their endless shrimp promotion was responsible for $11 million in losses, and then in the fourth quarter, they said it was responsible for $12.5 million in operating losses. So we were all like, oh, oh, it's the shrimp. But I mean, they never really answer the question of why are you still doing this? Because Endless Shrimp used to be a temporary, like, 2 to 4 week promotion that they would run, and for some reason they were like, no, this is permanent now. Everyone gets Endless Shrimp all the time. Endless means endless.
Quite a nefarious reason as well.
Oh yeah, that's the best part. That is the best part. So, like, blaming Endless Shrimp for the death of Red Lobster here is kind of like blaming Elvis's last meal for his death. Like, that's not what happened. There was a long string of events that kind of compounded onto one another. So in order to answer this question, we just need to do a slight bit of history so you understand some of the ownership. So Red Lobster used to be part of a big conglomerate of restaurants called the Darden Group. That includes other beloved consumer chains that are all over communities of America, like Olive Garden, Longhorn Steakhouse, Cheddar's. Oh, God bless Cheddar's. Featured heavily in episodes of Glee. But starting in the 1990s, this group of restaurants was spun off on its own. They were originally all inside General Mills, which is crazy. Isn't it crazy? The people who provide you with your Endless Shrimp also provide you with your morning cereal. That's just a bit... I don't think I love that overlap. But anyway...
Yeah, you're going very American on me now. I don't have a lot of context for all
this.
Okay,
sorry. You didn't watch Glee, Mike? What's going on?
I think I remember Glee, but no, not religiously. Anyways.
Okay. Anyway, so in 2014, Red Lobster's going along with the Darden Group, and it's with all his restaurant friends. And then the Darden Group says, Red Lobster, like, you're not doing too hot. We're getting rid of you. And this was basically done because it was underperforming Olive Garden. To me, that makes sense because obviously the margins on lobster cannot be as good as the margins on a bit of pasta. Like, pasta's just flour and water. You definitely can make more money off that.
You're being generous, and Olive Garden makes fresh pasta there as well.
Sorry, Olive Garden reheats pasta, so I'm sure the margins are even better. Realistically, you don't even have to make it by hand. So just kind of generally, there seemed to be a bit of a slump in the seafood business in America. I think people weren't really seeking out a dedicated restaurant. Apparently, from restaurant insiders, there was a trend of when people were seeking seafood, they wanted to go to non-exclusive seafood restaurants. They wanted to go to a steakhouse and, like, have lobster as an option. So Red Lobster was having a hard time, right? So then what ended up happening was Darden spun it off and they sold it to a company called Golden Gate. And Golden Gate is evil as well here, but we're going to come back to them in a second. In 2016, Golden Gate sold 25% of Red Lobster to a company called Thai Union, which is a Thailand seafood company, and that was for $575 million. And then they unloaded the rest of the company on an investor group called the Seafood Alliance, of which Thai Union was a part of, and that happened in 2020. So we're zooming in here on this company called Thai Union. For people in America, Thai Union actually owns the brand Chicken of the Sea, which had a bunch of weird commercials come out in the early 2000s that featured Jessica Simpson constantly being like, it's chicken? No, it's tuna. And then it was like immediately parodied on Saturday Night Live, and that went on for years. So Thai Union gets in there. They said, that kind of makes sense. We're a seafood company. You're a seafood restaurant. However, Thai Union also happens to just be one of Red Lobster's largest providers of shrimp.
Put two and two together.
There you go, yeah. So all of a sudden you're going, wait, like, this seems to be a weird bit of vertical integration that probably isn't going to be good for consumers. So as Red Lobster is coming out of 2020, struggling to recover from the pandemic, Thai Union is steadily becoming more and more involved in the management. It's muscling its way in there. It's making decisions. And it did things like increasing menu prices, which, okay, maybe we're trying to keep up with inflation. But then they also increased the number of tables that each server was responsible for from 3 to 10. So all of a sudden, this service that people were expecting on, Red Lobster is not high end, but it is nice-ish. And so
it's still like, you're going out and sitting down for dinner. It's not fast food at all.
You go once a month. You want a little bit of an occasion there. So all of a sudden the service is starting to take a dive. And then they continue to do these huge cost reductions that include something that a former Red Lobster executive said they were penny wise and pound foolish because they were hurting sales. They were hurting experience. Customers weren't satisfied. They weren't coming back. And another former executive, Lee Foreman, said that Thai Union didn't have any idea about running a restaurant company in the United States and that they were cutting costs everywhere they could, making life miserable for employees. So not only that they weren't being able to retain staff in restaurant or really within the executive suite. By 2020, we were seeing a massive turnover of the senior executives, including CEO, Chief Financial Officer, and Chief Marketing Officer. Kim Lauderup had been Red Lobster's longtime CEO. He retired in early 2021, and from there, this thing just became a revolving door of people coming in and out of the business. So that, again, is a red flag. If you can't maintain a manager, stuff is going pretty difficult. So according to experts, Thai Union had no credibility in the United States, and that meant when it came to hiring people for their executive suite, they basically couldn't get anybody. They would go to interviews, the CEOs weren't interested. Obviously, probably by the time they get a look in at the business, nobody wants to jump on a sinking ship. It's a really hard job. So in March of this year, 2024, they appointed CEO Jonathan Tibus, who is basically now the public face of this unpacking of what went wrong here. And he has to submit all these court documents because Red Lobster is filing Chapter 11 bankruptcy. And that's what we got to see on Monday of this week. And that unveiled that it was the shrimp, but it was the shrimp in a way nobody saw coming. So according to Tibus, the influence of Thai Union may have been at work when Red Lobster's then CEO, Paul Kenny, decided on the endless shrimp venture, despite significant pushback from other members of the company's management team. According to court filings, Red Lobster is investigating whether Thai Union and Mr. Kenny encouraged excessive merchandising for the promotion, resulting in a glut of customers that caused major shrimp shortages, and whether Mr. Kenny's decision-making circumvented the company's normal supply chain and demand planning processes. It accused Thai Union of exercising an outsized influence on the company's shrimp purchasing and alleges that Mr. Kenny made shrimp orders to Thai Union that did not flow through the traditional supply process or bid cycle or adhere to the company's demand projections. Interestingly, when Thai Union got in there and took over Red Lobster, it eliminated all other relationships with shrimp providers. So the only people Red Lobster could get shrimp from was Thai Union.
So basically, the shrimp seller comes in, buys the shrimp restaurant company, and just says, "You should sell shrimp forever."
They're like,
shrimp is the only thing. And by the way, you're the only people we're gonna sell shrimp to as well.
Yeah. So rather than Red Lobster, they were like shrimp, red shrimp. Like, come on, we gotta do shrimp. And according to CNN, Thai Union had seen the endless shrimp promotion as a way to, quote, sell off the mountains of shrimp it was catching. This is like drug peddling. They were like,
pump and dump. Basically.
We have all this shrimp, sell it to Red Lobster. Anyway, so while Thai Union might have come ahead here in the shrimp wars, it is now bleeding from its Red Lobster ownership. In Q4 of 2023, it took a one-time impairment charge of $530 million. That's gotta sting. And it would appear this.
I don't think 6 months of endless shrimp is going to make up for 600 million quid.
And it would appear that's the end for them. So according to their Thai boss, Thirafong Chansiri, after detailed analysis, we have determined that Red Lobster's ongoing financial requirements no longer align with our capital allocation priorities and therefore are pursuing an exit of our minority investment. Okay. You sold off all your shrimp and now you're not interested anymore. So it was the shrimp, but it was more the man selling the shrimp that took them out.
It was big shrimp rather than shrimp consumption.
It really was big shrimp. Who knew big shrimp existed? Would you call it big prawns?
Big prawns? Well, we call them prawns in Ireland.
Yeah.
Shrimp is a very American term.
Yeah.
And I think shrimp in Ireland is like the little tiny ones. Do you know what I mean?
Oh, yeah, the little
so
ones.
There's scampi, prawns, and shrimp that are all of the same family, but I don't know the difference.
Yeah.
Okay.
I think shrimp are big. I'm like, a shrimp is substantial and a prawn is smaller.
Yeah, maybe.
Okay. All right.
Okay. So any other missteps from Red Lobster management that led to the kind of bankruptcy?
Oh, yeah. So, we got to go back now and we got to talk about Golden Gate Equity. They're not getting off scot-free here. They also got in there and wrecked the place. So, in 2014, as I said, amid flagging sales and pressure from investors, Darden spun off Red Lobster. And that resulted in a $2.1 billion sale to Golden Gate Capital, which is a San Francisco-based private equity firm. Dun, 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 private equity. To raise enough cash to make the deal happen, Golden Gate sold off Red Lobster's real estate to another entity. In this case, it was called the American Realty Capital Partners. So basically, the land that the Red Lobsters were sitting on was no longer owned by them. This meant that each Red Lobster location was all of a sudden responsible for leasing their location, which is a pretty horrible additional expense that you have to now hand over to your individual stores. However, to be fair to Golden Gate, even if Darden had kept Red Lobster, it's not clear it would have made a different decision. A press release from the time does show that they did have some outreach and contacted buyers in order to do a similar thing. So, I mean, maybe Darden isn't getting off scot-free here either. So now they've added on a rent charge to everybody who's running a Red Lobster location. And I suppose that could be okay if you see your Red Lobsters as thriving and having strong cash flow and being able to make this payment. But unfortunately, in 2020, a global pandemic hit and all the in-person restaurants had to close. And so now you have given an additional expense to a group of restaurants that can't even be open to try and make money to pay this. And according to Jonathan Mays, who's the editor-in-chief of Restaurant Business Magazine, the thing that private equity does is just unload assets and monetize assets. And so Golden Gate effectively paid for the purchase of Red Lobster by selling the real estate. So it'll probably be fine, generally. But there is going to come a time in which your sales fall, your profitability is challenged, and your debt looks too bad. And then suddenly those leases are going to look awfully ugly. And that is exactly what happened here. Sales were slowing down. The pandemic hit. Sales fell off a cliff. And then you had all these charges. You didn't know what to do. So you begin steadily closing restaurants, but it's not enough. Yeah. You can't keep up. And yeah, just basically this decision made Red Lobster incredibly financially fragile, and then it could never really rebound from 2020.
Yeah, that's all. It's all very short-termism, really, isn't it? What did you say? Penny wise, but pound. Stupid with the pound.
Yeah, penny wise, but pound poor. Something like that was the way. Was the way
that's a good term,
the executives made it. Yeah, and it does kind of seem like, as we all know, private equity gets into spaces and all they're looking for is how can we monetize, how can we make this profitable, how can we strip money out of this. Yeah. But I mean, when we talk about the way private equity goes into tech companies, they're like, the efficiency seems so obvious. Like, do you remember when private equity went into Salesforce and they were like, why do you have Matthew McConaughey on retainer? And we were all like, oh, of course, you can save money there. But like, nobody's like, sell off all of your real estate assets. I'm sure that'll work.
Yeah, well, it's always the tactic. They just look at how to produce cash flows out of any entity at all.
Yeah.
So it doesn't really matter. So if they're seeing, oh, well, we've got this asset where it's sitting on $1 billion worth of property, we'll cash that out.
Yep.
And we'll take from there. So is this the end of Red Lobster, or is it going to keep going?
Well, if you're a fan of the Cheddar Baked Biscuits, you might still have some time to catch them. So John Gordon, a restaurant analyst in San Diego, he basically said that, like, while this is very shocking and while this is likely the product of several years now of mismanagement and kind of investors being put first, Red Lobster has been in somewhat of a 20-year decline. They kind of haven't adjusted correctly. As I said, kind of at the top, they're starting to lose out to steakhouses. So that we do need a bit of reinvention here, but I do think they have been budgeted for that reinvention. So while they have filed for bankruptcy, it's Chapter 11, so they are essentially trying to refresh themselves. And according to their new CEO, who I mentioned, Jonathan Tybus, he's basically been brought in for the restructuring. He said, restructuring is the best path forward for Red Lobster. It allows us to address several financial and operational challenges and emerge stronger and refocused on our growth. The support we've received from our lenders and vendors will help ensure that we can complete the sales process quickly and efficiently while remaining focused on our employees and our guests. So as of right now, many of the locations will remain operational. They're going to continue to serve shrimp. I don't think they will be endless anymore. So sorry to anyone looking forward to that. But as of right now, the company does want to survive. It will be much smaller. I'm sure probably everything on the menu will be a bit more expensive. But I do think they're going to try and stick around. So we'll see how it goes.
Yeah. Okay. So endless shrimp was the problem. Nefarious owners was much more a bigger problem. Is that a fair summation?
Yeah, and the endless shrimp being pumped through your restaurants by your Thai owner who has so many shrimp that they need to get rid of them, which, like, that's never how you want to buy shrimp. Any seafood product, you don't want to be like, this was the leftovers. No.
Yeah, it's the Anthony Bourdain tip is never ever order the
seafood
stew special, because that is all the nasty stuff they couldn't sell.
Yeah, no, it's you want catch of the day. You don't want excess from the boat bottom. Yeah. All right.
Okay. All right. That was Red Lobster. So moving on to big deal or no big deal. Do you want to go, or will I? I'll start.
Oh no, I'll tee you up here. So Wall Street's top fund managers are piling into Chinese stocks. This is a bit of an interesting turn here. We saw a big sell-off of Chinese stocks the last few years. So is this a big deal or no big deal?
Yeah, probably a big deal. So these guys obviously know their stuff and they're seeing something. So David Tepper from Appaloosa Management, I think he also owns the Carolina Panthers. Oh. So he has Alibaba as his fund's top position at 12% of the fund. He actually has 25% of a $7 billion fund now in Chinese stocks. Mm-hmm. Michael Burry, he's famous from The Big Short. He was the character played by Christian Bale. He likes to make these big, large concentrated bets. Obviously, The Big Short is a good example of that. But he is up to his investment in JD.com in Q1. It's now his fund's largest position, with Alibaba at number 2. And over the course of Q1, Citadel's Ken Griffin also upped his Alibaba stake as well. So at first glance, yes, China is very much a popular topic amongst top investors, and for very specific reasons. But it's also tough to identify why people like Tepper and Burry, and especially Ken Griffin, who's, Citadel is basically a quant fund. So it's tough to identify why certain investors are making these moves, because in investing, everyone is playing a different game. This was announced that they all upped their investments in China, but to be honest, they could just be in for a quick value play. They could have already sold them off by the time we're reporting for this. For all we know, we don't know until the next 13F comes out. So I don't want to give too much meaning to this, but at first glance, the SMCI China index has rallied nearly 30% from the end of January, and hedge funds might just be calling a bottom.
Yeah.
So, it's helped by the fact that the Chinese index is trading at about half the valuation of the S&P 500 at about 10 times earnings. So there's definitely value there. We're also seeing some economic policy brought in to help support the stock market, and also in particular the property market, which was very much a big systemic risk there for a long time. It was kind of teetering on the edge. Chinese government have said they're going to invest $43 billion into it to shore it up, essentially. We've seen how effective policy measures can be for the stock market in particular. Just look at the US over COVID. So yeah, it's a big deal. If you're interested in this type of investing, I think you kind of need a economics degree to really not go in blind here. It would be too risky for me in terms of just plain ignorance about the Chinese economy and how much control, because we've seen this for so long, how much control the government in particular can wrest over its top companies. So yeah, if you're interested in this kind of thing, it's a big deal. I'd leave it on the sidelines personally, but it's an interesting topic, I suppose.
Yeah, I suppose the centralized government control is always going to be the issue there. You don't really know what way they're going to move, because I remember like Alibaba stocks when it IPO'd, and then in subsequent years it's had some big sell-offs, and it's always been because we see rumblings of the Chinese government saying, "Oh, we will begin to control like how much private ownership can be concentrated in a single person." So then you're like, okay, does that mean Alibaba's CEO is going to be forced to sell off a big chunk of his stock? There's just, the rules are just a bit different over there. We don't really, they're a bit unpredictable. Yeah.
It's a minefield. So like Jack Ma, do you remember he went missing for like 2 years?
Yeah.
Do you know what I mean? And then they completely nixed the Alipay IPO. Yeah. So it just be wary, I think. Know why you're investing in that region, and if you don't, or if you can't foresee risks like this happening, or if you don't know why something like that would happen, then I wouldn't really recommend investing in China. But that's just my opinion. Okay, this is a very funny kind of dystopian nerdy story. I like it though. So last week OpenAI released its AI voice assistant Sky, but then basically withdrew it straight away after, because it sounded so similar to Scarlett Johansson. Scarlett Johansson famously played the AI voice in the movie Her, where Joaquin Phoenix falls in love with the computer. So OpenAI CEO Sam Altman referenced this in a tweet a few weeks ago as well, kind of adding to the dystopian nerdiness of all this. And on top of that, Johansson came out with a statement on Monday basically saying she'd been approached by OpenAI to license her voice but declined, and they just kind of made it anyways. Is that essentially it? Yeah,
so basically according to her, she said that she was contacted in September of last year, and they basically said, hey, we're making this voice assistant, we would love for you to voice it. And the reason they wanted her was because of her, and they framed it to her, they were like, we think that this would be a great opportunity to bridge the gap between AI tech and the creative industry. And she said no, which I'm not shocked by. I feel like Scarlett Johansson is like, no, I'm gonna go do some indie movie and then make $100 million action film. I'm fine. However, it gets a bit controversial because what ended up happening was then they announced the release of Sky anyway, and it was coming, and she says that 2 days before Sky made it onto the market and we all got to see it, she was contacted again, and they were like, are you sure? Can we please, let us license your voice? And she never responded to them because they only gave her 2 days. And she said by the time she went to respond to them, Sky had already come out on the market, and a bunch of her friends and family contacted her to be like, hey, are you working with OpenAI? And then she was like, oh no, like something has definitely gone on here. And the really kind of shady thing is through her lawyers, she has contacted OpenAI and asked them to detail the exact process by which they created the voice. And they said, no, we cannot tell you that. Altman has privately claimed that another voice actor was hired and paid to train Sky, but he said that they won't be able to say who that was for privacy reasons, which I understand, like, not wanting to expose your voice actor, but, like, we all know who the voice of Siri is. It's just some lady. Do you know what I mean? Like, it's not some big controversial thing. So I'm kind of in Scarlett Johansson's camp. I'm like, show us. If you didn't steal my voice, show me how you did it.
Yeah, but it's probably just a Scarlett Johansson impersonator, like, no?
I don't know. See, I think I'm kind of agreeing with a lot of people on the internet who are probably like, we think OpenAI took all of Scarlett Johansson's movies and like she reads a lot of audiobooks and all this stuff, and they definitely trained Sky using her voice and hoped that they would get her approval after the fact. They probably thought if we go in there and we offer her $10 million, $20 million, she will sign up, and like this thing that we've already built will be fine. Because it is so suspicious that they came to her 2 days before the release and they were like, please, real quick, just in case, like, let us say that this is you. So I do think there's something shady here, but I also think that this is kind of a reflection of a larger problem we're going to have with AI, which we haven't really solved yet, which is like, show me the data. Like, how do we get to a point where we feel comfortable where even if you promise to me and say, hey, I swear up and down, this was not trained using copyrighted data. This was not trained using an artist's assets. Show me. How do you prove that to somebody? I feel we almost need to have a third-party service that kind of floats over these AI companies and is able to say, oh yeah, no, they did not pull any data from copyrighted sources. Because this is something that's cropping up again and again and again. You know, Google right now keeps avoiding the question of whether or not they used YouTube in order to train their AI. And so it makes you feel a bit icky. You're like, I'm pretty sure people are being taken advantage of, but because of the way that this whole industry is structured, I actually don't have a way to verify it. And then on top of that, just as an aside, if you were going to try and steal a famous person's voice, the worst person you could try and do that to is Scarlett Johansson. She's worth $165 million. She has the time. She has the money. She just sued Disney last year. She loves litigation. She will be in the courtroom. Like, she was the highest paid actress for about 3 years in 2018. If anyone is going to fight this, it's going to be Scarlett Johansson. Not to say that OpenAI should steal anybody's voice, but they really did pick the worst person possible to try and do this to. So I'm very excited to kind of see how this goes. I think, like, even just the details that we have publicly at the minute, I would say that she probably has a case to go in and say, look, they obviously are trying to imitate me. And even if they can somehow prove, oh, it wasn't trained on Scarlett Johansson directly, I do think the company set it up to sound like her. Because Sam Altman tweeting her, he wants the illusion to be there that, hey, this is like that movie where Scarlett Johansson played the AI thing. It kind of sounds like Scarlett Johansson. And then you're kind of using her brand to back you up. And like, she's not getting paid for that. So
yeah, completely. It's such an own goal, like, and just because obviously Sam Altman probably fancies Scarlett Johansson,
exactly,
or
100%
fancies the computer from her, which is even worse.
Yeah,
and like,
so I actually do think it's a big deal. I think this is going to be another one of those like big cases that we're seeing at the beginning of this AI journey that is going to set the precedent for how AI companies are going to have to move forward, because this is a data privacy issue. This is a help me understand the model, show me how it works kind of a thing. So okay. All right, that's it. Anne-Marie, thank you very much for joining me. It's great to have you back. Well, sorry, you've been back for a while. It's great to have you back while I'm on the show. Thanks everyone for joining us today. Remember to hear more about the launch of Vodafone Business UC with Ring Central for organizations of all sizes in Ireland. Just click on the link in the show notes, or if you want to receive more details in your email, sign up now at MyWallSt.com. You'll obviously get all the details on Vodafone's new partnership with Ring Central, but you'll also get our weekly Stock Club newsletter, along with all the other good stuff MyWallSt has to offer, including a deep dive on one of our favorite deep moat stocks. All you have to do is actually just sign up on MyWallSt.com, give us your email, and that's it. Thanks for joining us today, and we'll talk to you next week. Oh, also, before I go, leave us a review. It helps. If you're on Spotify, if you're on Apple Podcasts, wherever you are, and our 5-star review does help the podcast. So
Okay, that's it. We'll talk to you next week.